In America, there's a silent divide, not between the rich and the poor, but between those who understand money and those who never will. The truth is, most people work for money their entire lives, while a small group quietly makes money work for them. And the difference? It starts with a single decision: to invest. But here's the problem. No one teaches you how. Schools don't teach it. Parents often don't know it. And the internet? It's filled with noise, fake gurus, get-rich-quick schemes, and people flexing money they didn't earn. So, where does a complete beginner even start? This is the story of beginner investing in the United States, and how ordinary people are building extraordinary wealth from almost nothing. It starts with a simple idea. Your money should not sit still, because every dollar you don't invest is losing value. Inflation quietly eats away at your savings every single year, making your future more expensive without you even noticing. And yet, millions of Americans still keep their money sitting in low-interest accounts, afraid to take the first step. But here's what most people don't realize. You don't need thousands of dollars to start investing. You don't need to be a financial expert, and you definitely don't need to pick the next Apple or Tesla. In fact, some of the most successful investors in history follow a much simpler rule. Own the market, not individual bets. This is where everything changes. Enter index funds and ETFs, the backbone of beginner investing in America. These are not flashy investments. They won't make headlines. But they quietly outperform most professional investors over time by spreading your money across hundreds or even thousands of companies. This strategy is called diversification, and it's one of the most powerful tools in investing. Because instead of betting on one company, you're betting on the entire economy. And historically, the US economy grows. But here's where beginners make their first mistake. They wait. They wait for the perfect time. They wait for the market to crash. They wait until they know more. But time is the most powerful force in investing, not timing. The longer your money is invested, the more it compounds. Compounding is where your returns start earning their own returns. And over years, even small amounts can turn into life-changing wealth. This is why some investors follow what's called the pay-yourself-first strategy, treating investing like a monthly bill, just like rent or Netflix, because consistency beats intensity every single time. Now imagine this. Two people start investing. One invests $100 every month, starting at age 20. The other waits until 30, but invests twice as much. The first person still ends up with more money. Why? Because time matters more than effort. And this is where modern technology has changed everything. In 2026, investing is no longer limited to Wall Street or wealthy individuals. Today, anyone with a smartphone can start investing with as little as $1. Investment apps have exploded across the US, making it easier than ever to buy stocks, ETFs, and funds instantly, with zero commissions. In many cases, platforms like these have removed the biggest barrier to entry: access. Now, the only barrier left is mindset. Because the biggest enemy of a beginner investor isn't the market. It's emotion. Fear when prices drop. Greed when prices rise, and panic when headlines scream, crash. This is where most people fail. They buy high, sell low, and repeat the cycle. But successful investors do the opposite. They stay calm, they stay consistent, and most importantly, they stay invested. Because markets go up and markets go down. But over time, they tend to go up, and this is backed by decades of data. Now, let's talk about what beginners should actually invest in. Because here's the truth. You don't need a complicated portfolio. You don't need 50 different stocks. You don't need to watch the market every day. A simple portfolio can be built using just 3 things: a total US stock market fund, an international stock fund, and a bond fund. That's it. This simple structure gives you exposure to the entire global economy while balancing risk and stability. And for most beginners, this beats trying to outsmart the market every single time. But before you even invest your first dollar, there's something even more important: your foundation. Because investing without a safety net is like building a house on sand. That's why experts recommend having an emergency fund, typically 3 to 6 months of expenses, before you start investing seriously. This protects you from unexpected expenses, so you don't have to sell your investments at the worst possible time. And then comes debt. High-interest debt, especially credit cards, can destroy your financial future faster than any bad investment. So before chasing returns, eliminate the guaranteed losses. Once your foundation is set, everything becomes easier. Now you're not investing out of desperation. You're investing with strategy, and strategy always wins in the long run. But here's something most YouTube channels won't tell you. Investing is boring. Real investing is not exciting. It's not day trading. It's not chasing viral stocks. It's not turning $100 into $10,000 overnight. In fact, if your investing feels exciting, you're probably doing it wrong. The real game is slow, steady, and almost invisible. But over time, it becomes unstoppable. This is why many experienced investors say the best investment strategy is the one you can stick with. Because the market rewards patience, not perfection. And if you zoom out, you'll see something powerful. Every major downturn in history, every crash, every recession, eventually recovered. And those who stayed invested came out ahead. This is the mindset shift that separates beginners from winners. It's not about being smarter. It's about being disciplined. Now let's address the biggest myth of all. I don't make enough money to invest. This is the lie that keeps millions of people stuck. Because investing isn't about how much you start with, it's about starting at all. Even $10 a week can change your future if you stay consistent. Because small habits create massive outcomes. And this is where financial freedom truly begins. Not with a big paycheck, but with a decision. A decision to think long-term. A decision to ignore the noise. A decision to invest in your future self. So, what happens next? If you're watching this, you're already ahead of most people, because awareness is the first step. Now comes action. Open an account. Start small. Be consistent. Ignore the hype. Focus on the fundamentals, and most importantly, give it time. Because one day, years from now, you'll look back at this moment and realize this was the day everything changed. Not because you got lucky, not because you found a secret, but because you made a simple decision to start. And that is how wealth is really built in America.